from our point of view, the lockdown and measures taken were prioritizing safety, and naturally so, and thanks God so, but has led to a loss of productivity with serious, business and economic implications. Foremost, we see Kuwait business environment was looking a little bit more onward. The society has adapted to basically local, basically turning inward, mainly in leisure, hospitality, education, and healthcare. The impact basically from COVID has been substantial, but I would say much better than what we expected at Markaz. Earnings of listed companies were down approximately 60% year on year, 20 versus 2019, with banks down by 50%. The biggest losers were real estate due to collection and, in effect, some pressure on expatriate population, and financial services. Telecom fared reasonably well. I would like to stress here that the Kuwait stimulus was lower in the region, standing at about 1.2% of GDP compared with Saudi Arabia of 6.3%, which was very good for the government balance sheet, but not as positive basically for the private businesses. In general, we saw basically developed markets were very aggressive on the stimulus, like the US at 25% of GDP as of today, and the emerging market took the opportunity basically to embrace reforms. We were kind of slow on the reforms. Just to sum it up, leading to recovery within your question, we feel that there is a tailwind, basically positive tailwind on the recovery from banks, retail with online shopping, Kuwait-centric hospitality and leisure, and mainly centered around quality of life, education, healthcare, technology, and enablers, and headwinds for real estate, both commercial and residential, general contracting, and outbound hospitality and business hotels. But I would like to add one more statement. Basically, unlike 2008, the banks this time played a very, very supportive role and continued to provide liquidity to most sectors, and which basically has been a great positive help during this crisis. As His Excellency said, this will require a holistic approach from talent building to legislations to financing and regulations, all working in concert. I think in that equation, clearly the banking sector is ahead of the other sectors. Now, Kuwait has a lot of room for more disruption and diversification by allowing the growth of the SMEs. However, the environment can be tweaked a little bit in order to become more conducive for business formation. I would like to say two things. George mentioned demographics and the composition of demographics. That alone is quite a force toward diversification and business formation. And the second is the fiscal pressure. Also, as His Excellency said, there will be more reliance on privatization. And along with that, also, the need for regulation to include the national workforce into that process. Non-banks, we believe, I'm seeing the only non-bank among you, can play a very serious role in that space. The banking system in Kuwait is relatively risk-averse, and very understandably so. For as long as we have assurances on deposit remaining in effect, we're not likely to see a spur basically in risk-taking. Because of the constraints on interest rates, it just doesn't pay to take risk. And there is nothing wrong with that. It is basically the structure of the banking sector in Kuwait. Well-capitalized non-banks, financial institutions, we can get into high-risk financing, such as equity, quasi-equity, and debt. For example, the private debt market in the developed markets have ballooned. They charge substantially high interest rates, almost like equity-like returns, and replaced basically Western banks in funding the private equity and the VC sectors, which is quite important in effect to drive basically diversification and growth. So also, tweaks, for example, the non-banks can be very helpful with the tougher fiscal conditions we see build up in receivables. I think factoring and securitization, if properly regulated, and I think we have some way to go, can play a role. Other examples would be mortgages that can kind of, if it is a little bit better regulated, once it's regulated, hopefully, can fuel the housing industry and take away the pressure from the government.